Hey guys, welcome back and hope you guys practice the second method. Okay, so always remember this, don't skip whatever you're learning because there is no single method if you use, you are going to be more benefited. You're going to use all the methods which you're going to learn throughout this, all the training videos, and end of that when you use all the methods and come up with one stock for a day because you will, when you put money, you will trade only one trade per day. So you need to use all the methods to finalize your stock picking and the method for the day. So don't just find one method which is going to happen. No, you need to use all the methods and come up with one stock. So practice everything. So if you're not practice second session, go practice the second session and then come to our third session. Now, like I told you in the previous class, for session 3, we need Fata premium dashboard. Alright, so that is nothing but an Excel sheet created by, I'm not sure, this is the website. So Fata premium screener. So you can go with anything, I think like this, Fata stock screener. So free version, premium version. So for this particular method, if you're interested, you can buy this because I normally use this, and you can subscribe for 2 months, or else what I did, I took off for 6 months because that is more beneficial. So I used it for 6 months. So it's up to you. If you want to learn starting, you can buy for 2 months. If you file it is good, it's up to you, decision making whether you want to buy it or not. In free version, you don't get the premium dashboard and intraday screen and all those tabs you don't get. That's the reason I'm just mentioning this. So after taking, you will get an email like this saying it has been activated and all that. I have renewed my plan. So it is, again, I have taken for 6 months. So I have the access to my email ID. So they generally give access to your email ID which you give. They give within 24 hours. I mean in the working time. So this is how it is. So we will be learning on the dashboard part for the third session, and the fourth session we will discuss on intraday screen. So anyways, on dashboard I will just share 5 different logics or areas where I look into, and what is the logic, why I look into, and how I utilize them. Alright, so this is the dashboard of this Fata, and anyways the market is closed right now and we have the data. So what I do basically, I will, the first way I look into is this top day 5 gainers and top 5 intraday gainers. Now, do you know what is the difference between this top 5 day gainers and intraday gainers? Alright, so I'll explain you. If you know, if you don't know, I'll just explain so that people who don't know will understand. Very important. So day gainers are the ones which you see on your NSE India, these numbers, whatever numbers you see. These are the percentage and NSE India top gainer stocks, whichever you see is part of this day gainers, that is positive and negative stocks. So these are calculated from the close price. Now let's say Maruti's close price was 6857. All right. From there, how much ever the current market price is, so much percentage it will show 1.22. Okay. So that is the meaning of this day gainers. So what is the meaning of intraday gainers? It is calculated from the open price. So that is the only difference. It is calculated from open price. How much ever the stock price is in the market, so much percentage is calculated from here to here, how much it has moved. But in day gainers, it is calculated from the close price, how much it has moved. Okay, so that's the reason if you see idea is 8.65% from close price, but from open price it is 7.62. Now what is open price? 9:15 open price will be ready, so you can start trading. That's why it's called intraday gainers. The stocks which moved from 9:15 are called intraday gainers. But these are the stocks from yesterday's close price. Morning 9 to 9:15 pre-open market will be there, right? So during that time, gap up and gap down will be there. So based on the gap up and gap down, this percentage will may be higher or lower also. But the actual ones which are traded for intraday are the ones here, started from 9:15. People traded this from 9:15 onwards. So these are intraday gainers, these are top 5 day gainers. And that's the reason if you see here 5.32, 5.48, this stock 3.74, 3.32, Sun TV is not here at all. Let's say Star is 7.4767, 7.19, 6.52, and PEL is 7.15. See the gap, 7 point gap down type 7.15. Here it is 5.39. Actual percentage is 5.39% movement for the day. So now what do I do from this logic? Very simple. So now this top 5 day gainers, you know that a lot of people will be investing in day gainers who don't even have knowledge. So keeping that logic in mind, I will definitely consider the day gainers. This is buy side, this is sell side based on market direction, which you learnt in our rule, right? The starting rule, 0.20 Nifty and all that what we learned initially in the first class. Hope you remember. So that rule will apply throughout for all sessions. So Nifty is buy side, then we go for buy here or sell these stocks. Now I'll take a name from the stock, but I will not take him. I'll just cross check whether he is there in intraday gainers or not. If he is not there in the list here, top 5, I will not take him. Imagine idea was here and idea was not there in the top 5. Then I would have not even taken idea as my stock. And always remember, we take stocks above 100 rupees. Okay, just for safety purpose. In learning time, 100 rupees above stock only I will take. Later it is up to you if you want to take bigger stocks or smaller stocks, all those. Now, if it was selling side, I would have taken star and I'm cross-checking star is here. Yes, he is there. Then I'm star is my stock. Dish TV is there, Dish TV is there. Like that. PEL is there, PEL is there. IDBI is there, IDBI is there. iBull is there, iBull is not there. So I'm not taking iBull. So that's an example. So you'll go with the top stock with 100 rupees above only. But and if he's there here only in the list only, you will take. If he's not there, no. So basically, you will avoid those stocks which are in the top because of just gaps. Okay. So you people, you would have seen, you take a top gainer, then the stock will not move only for the day. It will go sideways because of gap up. So only he was in the list in NSE India, wherever you see top gainer. Because of gap up, he's up. Later, he will not move. But these are the stocks which are actually moving from 915, whatever the price open, they moved 7% exactly. They moved 5.48%. So these are the actual movements. So I will definitely invest in top intraday gainers and losers. So I cross-check my stock. Why I don't ignore this? Because a lot of people will blindly invest in these stocks. Okay. And I always measure it with my intraday gainers. Whether if he's there here, cross-check, then only I will take the stock. Now you can apply the candlestick breakouts. That is what you learned. That is first class you learned, right? 9:30, 9:45, 10:15, 10, 11:15, that is 15, 30 minutes, 1 hour, 1 hour previous. That logic you can apply for this method, okay? Only in this method. Now next 4 methods we can't use candlestick breakout. Remember, only in this method because information is available throughout the day. So you can wait for each time frame and wait for the breakout based on the Nifty value, buy side and sell side. So hope you got an idea about the first method. The second method, what I look into, the next way where I look into is this area. You can also look into stocks which are first hour range breakout up, first hour range breakout down. Now what does this mean? It means very simple that your 10-15 candle, that is your first hour, right? So the first hour breakout happens. Okay. Now if I put 1 hour, so that is your 10-15 first hour candle, right? Today's market is bits less volatile, but see, this is your first hour candle. So for example, it is breaking down, it is breakout down. Okay, so first hour range breakout only. So this screener will capture the stocks which are breaking for the first hour. Now this is upside. Now what you saw example was downside. Now what you will do, you will take examples of these stocks. Okay, and this is available only at 10:15. Remember, because breakout will happen only after 10:15, right? Candle. So after 10:15, let's say 10:20, 10:25, some or the other stock will break. Now in the first method, you will be waiting for 10:15 candle breakout with the top stock, right? But you don't know which is that stock which broke first in the market. So that time, this scanner will capture the stock which is breaking first in the market. Now market is closed based on highest percentage it is showing. But at 10:15, you will see stocks which are breaking first. So that means he is bullish compared to them. And you're obviously considering the market direction. If Nifty is buy side, you will go for this stocks. If sell side, you would have gone to this stock. So imagine star is your stock. You will immediately go and put star in your radar like this, and you will check the current high of star. Okay. So you will not cross check candle or all that because candle breakout happened. That's the reason. See, this breakout happened. That's the reason this stock came here, name came here, right, in the scanner. Now what you will do, as soon as you go and see that, immediately you see what is the high and low. Now selling means low side. If it was buying side, then you would have seen high. So you will see what is the low at that particular point at 10:20 or 10:25, whenever the name came. And then you will put your order 5 paisa or 10 paisa below the low. Keep this in mind. So like that, whenever a stock comes, you will put same way. If it was idea, sorry, example, my idea is the below 100 rupee stock. Let's say Manappuram. If it was market was green, then you would have gone to Manappuram stock. Then you will immediately open what is the high of the stock. Your order will be above the high of that stock at that particular point. So be very careful. Now this stock will be available after 10-15, maybe 10-20, 10-25 based on market volatility. Stock names will come. You will go based on market direction. But you cannot trade on them like 11:30, 12:30. The movements will be already done. So keep the logic in mind. Stocks which are breaking in the first hour will be bullish stocks in the whole market. So you tend to not you're not taking at current market price. Be very careful. You are waiting for a high breakout. If the stock has a potential again to break its own high or low, that is when our trade will be triggered. If not, no trade. Discipline. All right. So get this into mind. Discipline is very important. No trade if it is not matching. If it is matching, 0.3% observation. Okay. Now during this time, you will be learning only 0.3% observation. So remember that. So this is our second method. Okay, high breakouts. Only in first method candle breakouts. From second method onwards, only high and low breakouts. Third one is price increase and volume increase, and price decrease and volume increase. Now this is very important. This is one of my favorite part. You would have seen in my live trading me making more than 100% profit in a day. So most of the stocks I got from here only. Okay. So what happens? Now in intraday, you know, the price should move plus volume also should be there, because in intraday movement should be there, price moving and sufficient volume also. So stocks which are traded highest are the ones people who will trade more. So here it will capture the stocks with good volume, 241%, 200%, 189%. Here percentage will be calculated. Same way for sell side, price decrease, that is price is falling, right? See, negative, but volume is increasing. That means almost like sellers. Now you will ask me, what is this percentage? Is it only buyers or is this only sellers? Now I'll explain you the logic of this also. Now how is this calculated? This is relative volume strength. This is this one. Relative volume strength. You see this? So this is the one, 320 here, see 320 here. So this is the volume, relative volume strength. Now what is relative volume strength? If you have not yet seen my YouTube video, then I'll just explain again for a lot of beginners who don't know. So let's say relative volume, how you will calculate. So now let's say you are calculating volume of previous days, okay? Maybe Monday, Tuesday, Wednesday, Thursday and Friday, like that. So previous 2-3 days or 5 days regularly, you will just check what is the volume. Now the average, when I say average, you will add everything and divide it by number of days. So the average is, let's say, 250 shares traded. Okay, no, let's say 1000 shares. Easy example. So 1000 shares are traded is the average traded in the past. So this is a calculation. Now imagine today's volume is 500 shares till now. Okay, maybe morning, afternoon or something, 500 shares have been traded. That means 50% volume is the relative volume. All right. What if 760 shares are traded? That means 76% volume. What if 1000 shares? Very good, 100% volume. That means it is equal to your previous average. But what if it is 1500 shares traded today? That is 150% volume, right? So like that you can see 241%, 200%, 189%. These are the examples. So that's how it is calculated. Now they have some formula, I think, so which captures only above 150 volume only. See, only above 150 they are capturing, rest they are not capturing. And percentage movement obviously should be there. If not, it will not come in this criteria. Now let's say NMDC is there. See here, 634% volume, but he is not here because maybe the percentage movement is not there in that particular stock, maybe somewhere low. So that's the reason he is not here. So if you want to know when the stock will come here, if you keep an eye here, you'll have the highest relative volume strength here. So when it crosses 150, morning you can see 60, 70, 80, the highest one you can see. Once he crosses 150, you will get to know that he is going to come here or else here based on his present percentage. Positive means he'll come this side, negative means he will come this side, right? So now as soon as he crosses 150, he may come here. So you can pick his stock and you can go for high breakout or low breakout based on market direction. That is, this side is buy, high breakout, this side is low breakout. normally these stocks tend to move 1%, 2%, 3% from our levels. There are days when it has moved 4, 5% from my level. That's how I crossed 100% profit. So you can also observe this type of method. Either you can book 0.3, but the reason I'm sharing this particular method is for you to observe, okay, observe that this particular thing has higher potential most of the time. When I said most of the time, let's say in 10 trades, whenever it is fulfilling 10 trades you're getting, I would say 7 to 8 trades you are getting a better movement stock, like 1% movement, 2% movement from your level. So be very careful. As soon as the stock come, like something is coming near 140, 130, 140, keep an eye on him because he will come here or here, right? All right. Or else what will happen? You will see mid of the day, most of the stock would have already moved. So no point in taking him. So normally I call this as jackpot trades. All right. The graph also is there for the same price increase, volume increase, Manappuram, all that, and star. If you see, most of the stocks went today. I mean, Manappuram was a buy side stock, and still I think he went up even though the market was red. And if you see, star also has come down. So generally these type of stock tend to move, but you need to have a good advantage from the Nifty, like where most of the people go, we will get to know by Nifty. From that side we will take the direction. So this is the third method which I took. So don't get confused. We are learning 5 different methods. If you're getting very much confused, practice one by one. See the video half, practice that, see the video a little more, practice like that. But I will try to finish this 5 methods because in session 3 normally I share these many concepts. So 3 concepts I have shared with you. Now the fourth concept is NR7 breakout. Now you would have seen my recent technical analysis first video, concept video, where I spoke about narrow range. So if not, go to my YouTube channel or type narrow range smart trader. You will get to know what's the logic of narrow range. But I'll just tell you, you can observe these 2 areas only if Nifty is 0.51 percentage when you take a trade. So if Nifty is above 0.50, not 20, if 0.50 positive buy side, negative like this sell side, then only you will come and check. When market is this above this value only, you will check this column where you will get stocks with breakouts happen. These are normally short term bullish, not that great for intraday as per my experience, but for short term period they will definitely give you a benefit, because NR7 breakout down means it's a bearish stock and this is a bullish stock for short term period. So if you want to take chances, you can go for a high and low breakout whenever you see the name. Always remember, don't get delayed after the name come, because the more you delay, the stock movement will be done. So all these needs fast fingers except the first one where you can wait for candlestick breakout. The information is always available, but in rest all methods it's a pop-up. When the formula satisfies only, these things will come here, right? So you need to wait for that. So here you can go buy side when the market is 0.50 up, here negative 0.50 sell, go with the stock, and high breakout and low breakout for this. So this is basically what I would say is for short term, but just keep an eye on this. Fifth and last method is price above yesterday high and price below yesterday low. Now a lot of traders, like how we trade on half an hour, 1 hour candle, a lot of traders trade only on 1 day candles. Now what they will do, they will go for breakouts, like, oh, breakout happened, trade, breakout happened, trade, breakout happened, trade, breakout happened, trade. Okay. Now whatever target they will put based on their method and techniques, all that, but they will have a selected stock also, not just random all stock. Their favorite stock which they trade on a daily basis. Only if it breaks, they'll take a trade. If not, they will not take a trade. So like that, keeping that in mind, this price above yesterday high is nothing but, this is yesterday's high. It will break out the high means price above yesterday high. If it breaks down, price below yesterday low. So price below yesterday low. So it broke yesterday's low, broke yesterday's high. So these are the stock names. Whenever a breakout happens, the stock name will come here. So whenever a stock name comes here, again you can go and check what is the high or low and enter 5 paisa, 10 paisa gap and enter your order. Only when it triggers 0.3%. If not, cancel the trade. All right. So these are the 5 different areas I look into dashboard. That is this. First one, second one is first hour range breakout. Third one is jackpot method. Fourth one is NR7 short term basis. Fifth one is price above yesterday high and price below yesterday low. All right. So these are 5 areas we can look into, and once you practice individually, you can mix up all this, because end of the day when we trade, we will trade only one trade. So you need to pick one stock, market direction. So you can compare from here and here, and then take a proper trade also. So that's just a hint for you. But now it's a practice time. Till sixth session, we are learning how to pick a stock and becoming confident from various methods and observing which time frame will work for us, because you would have practiced in different time frames. So which time frame is the best, which candlestick is best, in which time frame reversal is happening, and how much should be our stop loss so that we can escape those reversals. All these observations I want you to do, and hope you are doing that. If you do, it is good for you. If you're not doing, it's up to you. So anyways, these are the 5 methods which you can start using. For that, you need Fata dashboard. This is the premium ones. You won't get in the free version. All this algo sheet and all. So it may be helpful for you. So try observing it for at least 2 months. If you like it, then you wanna buy. You can, up to you, 6 months or whatever you wanna buy and use it. So you can definitely use this. So start practicing again. Don't get in a hurry, because the more time you spend, trading is not just learning in one day, few minutes. It's a long-term process. So you're learning these videos in a short-term period of 3 months. So when you practice this, you get better and better, and slowly you become better trader. So that is the logic. So believe in yourself. That's how you can believe in what you learn also. So thank you. All the best.